Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to talk about the bloodbath in the markets in the last few months and weeks, and what will happen now from here in the next few, say, days, weeks, and months. Have we found the bottom or not? We approached the end of a long-term bull market starting from 2009 to 2021, ending with record amount of retail participation and margin debt. TikTokers and YouTubers were spreading like weed from the ground and bragging how easy it is to make money from the markets. Every time you see TikTokers and YouTubers spread like weed, be really careful and think about valuation, since valuations really matter. The bull market was in the beginning stealthy and fueled by QE. Prices began to slowly rise after the financial crisis for many years without too much retail participation. It was a slow accumulation phase by the big money and institutions. Only during the pandemic, the stimulus packages were fueling the last leg of the mania. Big Wall Street money was needing this last leg to offload their shares to poor retail investors who have no clue about how to value stocks and why they even bought their stocks. Smart investors like Warren Buffett or insiders were dumping their shares at a record pace, while the retail buyers bought every dip. Unfortunately, at the end of a bull market, prices are getting so out of whack that it takes many years to get back to the previous all-time highs. In some cases, this never happens. This hurts when the underlying company doesn't even pay a dividend, so you become literally like a bag holder. We are now at that point where the Fed has burst the bubble. The stimulus and lockdowns created an inflationary spiral, which the Fed now tries to solve with sucking out liquidity from the market and raising interest rates. What happened is that smart investors and insiders exited first, then the traders and the hedge funds, while retail was buying the dip. The markets were making lower highs after lower highs, and retail investors who were conditioned to buy the dip are sitting on some huge paper losses. This is where we are right now. The retail buyers, they ran out of money and they don't have cash anymore to buy the dip. A lot of retail investors couldn't take the pain anymore and they have sold their shares just to feel better. The pressure to look at the portfolio shrinking daily was just too much, while at the same time they ran out of money. The stock market already had a significant drop, with the S&P dropping roughly 18% from its highs, the Nasdaq Composite around 30%, and the Dow roughly 13.5%. Many small retail stocks, which aren't profitable yet, got decimated by 50 to 90% already. What will happen with these stocks if the indices are really going into the final stage of the bear market? What final stage of the bear market? Aren't we already bombed out and dead? How much could stocks drop further? Well, in my opinion, the broad market has still room to decline another 30 to 50% from here. In my opinion, we are just in the first leg of a bear market. I was warning about this bear market in September of 2021 and made a video in October 2021 with the title, "Is the bear market finally here? Worst stock market crash ever in 2022. I know that title is very dramatic, but I think the crash or the bear market we are seeing right now is really similar to the dot-com bubble or even the financial crisis, the stock market crash during the financial crisis. If you haven't watched this video, please do so just to see how it wasn't really hard to see the decline coming. I was outlining all the headwinds from sucking out liquidity to ETF outflows. Now, predicting how things might unfold from here is a bit trickier. The market currently is in a really oversold territory, and the sentiment is at its lowest I have ever seen in my career so far. And I have started my stock market journey during the highs of the dot-com bubble, so I can say I have seen a lot. Normally, what happens is that once sentiment is so bearish, it only needs a small ray of hope to start a bigger bear market rally. I'm expecting to see such a short-term bear market rally maybe as early as next week. The S&P might drop to around 3,800 and start a bear market rally from there. Many will claim that the correction is over and we're heading to new all-time highs, but chances are high that this rally will also fail. It all depends on what the Fed is doing, since they have distorted all markets to an unsustainable degree. If the Fed still wants to fight inflation and are hesitant to give the market more liquidity, we might see the S&P 500 at around 2,500 points before everything is over. In the short term, chances are extremely high that we will see a bear market rally, maybe even starting by the end of this week or next week. Like I said, sentiment is at its all-time low. Inflation numbers came in and they were worse than expected, and the markets took a big hit. But what was interesting is that the 10-year Treasury yield plunged lower from around 3% to currently 2.8%. TLT looks also to try to find a bottom, marking some bullish divergences. In my opinion, it is very likely that the rate of inflation will slowly decline from here due to the increase in interest rates. Though the Fed just began to hike interest rates, mortgage rates spiked to record levels again already. Furthermore, the decline in asset prices is the opposite of the wealth effect. People will tighten their consumption if their portfolios get decimated, and the lower income households are tightening consumption due to higher food prices and fuel costs. All this will most likely lead to a decline in the acceleration of inflation. It is hard to say how fast this deceleration takes place, since we still have supply chain problems and the war in Ukraine. These two factors may lead to a slower deceleration, so that the economy is going through a period of stagflation. Ultimately, I think the stagflation will transform into a short-term deflation before the Fed opens the floodgates again. Like I said, the Fed is an entity to transfer wealth from the masses to their owners. Their mistakes are by design. What will most likely happen is that the Fed will tighten into a slowing economy because of the stagflation and cause a recession by destroying demand. Once the recession has started and asset prices have fallen far enough and the wealthy have again started to accumulate them, the Fed will inject liquidity into the market, driving prices higher again. In the short term, even the slower deceleration of the rate of inflation might lead to stabilizing bond yields or even put pressure on them, so that cash from the sidelines will once again enter the markets. The markets are forward looking and starting to figure out the deceleration of the rate of inflation and declining yields. Even if the Fed will raise next time rates, the bond markets already did a lot of wealth destruction, so that the raise in interest rates is already priced in. Like in February 2021, where YouTubers and CNBC pundits were going all in into the markets and overbidding themselves with ever higher price targets to the upside, currently 95% of the people are looking for lower and lower price targets. Back in February 2021, I was playing the markets and stocks, but always pulled my money out once the stocks moved higher than 20%, leaving a small position in my deposit and positioning myself mainly into cash. In September last year, I was calling for a severe bear market, and now I see a bear market rally starting maybe even today, Friday the 13th, or by Monday. By the time I have finished this video, the markets unfortunately have already soared 4% today and closed very strong. So let's see if we have follow through on Monday or if the algos are selling off again. My money is on a follow through. The volatility will still be high, since many aren't trusting the price pops and selling into the rallies, and other ones starting to short. I have seen more and more small retail investors starting to short the markets, which will fuel this bear market rally higher. I want to be clear that I think this is a bear market rally, and unfortunately, I'm not able to predict how far this bear market rally can push prices higher at the moment. before coming ultimately back down. But I wouldn't be surprised to see the all-time highs again or close to all-time highs, similar to what happened to Bitcoin last year. But I will look for clues when the bear market rally has come to an end, and of course I will let you guys know. If you like this video, hit the like button to support the channel, subscribe for more market updates, comment and share. Bye guys, and see you in the next one.